Tuesday, right? Yeah, it's Talk About It Tuesday. So we're going to do some education, and hopefully this evening you will come to Talk About It Tuesday at Narcus in Cape Coral. For those of you who are tuning in, we know that you haven't gotten the nerve to come out and hang out with us live. So we're going to make sure that Brenda gives you a full-on 45 minutes or so of things about 1031s. Even if you've done them or you think you know about them, there's always something new that's coming on, and Brenda is going to keep you up to speed so that you can make more money in real estate. And that's the whole goal of why we do these educational things, is to help you have better tools and make more money. So without further ado, Miss Brenda.
Thank you for that wonderful introduction, JJ. So I'm with Midland Trust. We focus on a couple tax saving strategies for real estate investors. 1031 exchanges being one of them, like JJ mentioned, and we also do real estate in a self-directed IRA. So I'm going to talk about both and go over some things that you need to know. So a little bit about Midland. Like I said, we do 1031 exchanges and self-directed IRAs. So we are qualified intermediaries and also IRA administrators. We have offices, we have an office here in Fort Myers, we have one in Chicago, and then we also have one in Sioux Falls, South Dakota. So we're nationwide. We have over $3 billion in client assets. We've been in business for over 20 years now. And we do not give any legal advice or investment advice because we're not tax advisors or CPAs. So this is all for educational purposes only. So what is a self-directed IRA? So a self-directed IRA isn't anything really different than a normal IRA. You can, aside from the fact of what you can buy. So normal IRAs, you can buy things like stocks, bonds, mutual funds. But with a self-directed IRA, you can invest in things like real estate tax-free. So real estate is one of the big investments you can do. You could lend money out of your retirement account in the form of a note. There's also people have been buying cryptocurrencies, been big right now in your retirement account, as well as LLCs. There's a lot of stuff you can do using a self-directed IRA as opposed to a traditional normal IRA that you can just do stocks and bonds. So Midland, we do not do stocks and bonds. We only do alternative investments. So there's only two things you really can't invest in with a self-directed IRA, and that would be life insurance and collectibles. The reason being is life insurance benefits you after you die, and this is for retirement, and collectibles are hard to value. So another fun fact, a lot of IRAs are funded by old 401ks. So maybe you're working with a client that can't afford to purchase an investment property by themselves. You can ask them, do you have a retirement account somewhere, an old 401k from a past employer? Because they can move that money tax-free into a retirement account with us to buy real estate. So these are just a few of the options that you can invest in. I kind of went over most of these, but I would say real estate would be our biggest one here in Florida. These are just a few benefits. So there are, this number's old, there are over probably $7 trillion in retirement accounts right now, and only like 2% of them is invested in real estate. Why is this? I don't know. Probably because nobody knows that you can do this. So that's why I had to come do these classes and teach you guys about this, so you can let your clients know that this is a whole bucket of money that they didn't even think about that they can use to buy real estate with. So another benefit is these are cash deals. So if you're buying a piece of real estate using your retirement funds and you're not doing financing, then it would be 100% a cash deal. So that's a faster turnaround time. Documents are done in 2 business days. We're very quick. IRAs are tax sheltered. So that means all of the rental income goes back into your retirement account tax-free, and all of the sale proceeds. So that's a bunch of money that you might have had to pay in taxes that goes right back into your retirement account tax-free, and you can be used to purchase another investment property tax-free. It's also a great opportunity to diversify your retirement portfolio. You obviously don't want all your eggs in one basket. your nest eggs in one basket, I guess we'll call this. So real estate is something that people know and can control. If you know the real estate market's crashing, it's a lot easier to get out of it than when you're in a stock market roller coaster that's crashing. So all real estate qualifies as long as it's for investment use only. So this isn't your primary home, this isn't a secondary home, this isn't your client's vacation home. This is truly an investment property. But all types of real estate qualifies, residential, commercial, land, condos, pretty much anything for investment use qualifies. I even have people doing Airbnbs with their retirement funds. So I did a class on that a while back for Airbnbs. So kind of cool. So just a few important rules when buying real estate, or your clients are buying real estate using their retirement funds. So the only thing that's really going to be different, that's going to appear different, is the title to assets. So instead of just your name on the contract, it's going to be in the name of your retirement account. So it'd be, for me, it'd be Midland Trust as custodian for benefit of Brenda Wetzel, IRA number 12345. So that's how everything will be titled, any documents related to the property. Like I said, no personal use, investment purposes only. When I say no personal use, like you can't even take a property that you already own and move it into your retirement account. It has, this has nothing to do with you except for investment purposes only.
That's a great point, because we can think of that.
A lot of people ask that. They're like, well, I already own an investment property. Like, can I just move it into my retirement account and get all these awesome tax sheltered benefits? No, you can't. That would be awesome if you could, but maybe you could do 1031 exchange, which we'll get to next. So income and expenses when buying real estate with your retirement account, all of the income and expenses has to go in and out of your retirement account. So any HOA fees, your property tax bill every year, any rehab expenses, all needs to be paid for using your retirement account. And that means all of the income goes back in, like I said, like the rental income and the sale proceeds. Another big rule is no prohibited parties. So this is a list of prohibited parties that you're not allowed to, basically this list, you can't buy a property from, sell a property to, and you can't rent to any of these people. Okay, so these people include all lineal ascendants and descendants. So yourself is considered a prohibited party. Like I said, I can't buy a property from myself I already own. I can't rent a property to myself that I am buying my retirement account. And the same goes for my parents, my grandparents, my children, their grandchildren. All of these people, your IRA cannot, you know, rent to or buy from. But you can partner with these people. So yes, it gets confusing because you're like, oh, I thought you said I can't do business with these people. Like I said, you can't rent to them, buy from them, or, you know, live in it. But you can partner with them to buy a brand new investment property. So there are three major ways to fund a real estate purchase using your retirement funds. The first one would be a cash purchase. So I have enough money in my retirement account. I fund the deal 100% using it. Cash deal, easy. Partnering funds. I love this part about it because nobody really thinks about this. Say I have an investment property for $200,000 and I don't have enough money personally to buy. I have $100,000, but where the heck am I going to get this other $100,000? I might not even qualify for financing. So where am I going to get this money? You could partner with yourself. So I could partner with myself personally. So $100,000, 50% of the property is owned by me personally. 50% I use $100,000 of my IRA funds. And now everything is split according to percent ownership. So the 50% that's in my IRA is tax sheltered. So that's going back in there tax-free, saving for retirement. The other 50% is going to me personally. So I get a lot of people asking me, well, I mean, that's great that I can save for retirement account, but like, I would like some money now. Understandable, I would too. But you can always partner with your retirement account, even 80-20%. Say you want to do just 20% in your IRA just to get a little bit of diversification and tax saving and extra money you didn't have, great. And then 80% goes to you personally. Everything's split according to percent ownership. Your IRA can also partner with other IRAs. So say, you're married and you and your husband each open up an IRA, each have $100,000 in it. You partner with each other and then 50-50, it's split that way. I can even partner with non-IRAs. So my IRA can partner even with any lineal ascendant descendants. So my dad can partner with me, but I just can't let him live in the property. So that's the difference. The third way is to get a non-recourse loan. So you can get a loan inside your retirement account. It is a non-recourse one, meaning that the property is used as collateral and there are higher interest rates to that. So there are people that do it. We have a list, but
Next question.
we do have a resource list. So anybody watching, or you guys, if you would like a list, let me know, I can send it to you. But that is an option if you don't have enough money and you want the tax shelter benefits.
So if you're partnering with yourself, can you get a loan for your own
Yeah.
self part?
Mhm.
And that's just a regular loan?
That would just be a regular loan, yeah. And then it would just show on the documents like 50% owned by you personally, 50% owned by your IRA, and your 50% is just funded by a loan. So yeah, totally fine. For those of you, if you couldn't hear, you can get a loan for the percent that you own personally if you'd like. So this is just the investing process. So what's the next step? Now you know the basics, the rules, everything you need to know. How do you get started? So the first step would obviously be to open an account with us. Ignore that first step. So step number 0 is open an account with Midland. You can go to apply.midlandtrust.com. We have an online application that you can fill out there. We charge a $50 new account setup fee. From there, you'll then need to fund your account. So you'll have to fund your account 3 ways. You can make a contribution, meaning I'm just taking money that I have in my bank account and I'm contributing it to my IRA. There are contribution limits, typically $6,500 to $7,500 a year, depending on your age. For realtors, there are accounts that have higher contribution limits. So get with me if you'd like that. And then from after, if you can do a contribution, you can do an IRA to IRA transfer. So say you have an IRA somewhere like Fidelity or Charles Schwab, invest in stocks or bonds. You could do a full transfer over to us or a partial transfer even. So say you want to keep your stocks and bonds in your account, totally fine. You can leave that open. You could have as many IRAs as you want. You could just move some over to us to buy real estate. Or you could, as I mentioned, fund it with an old 401k. So that would be called a rollover. So if you have a 401k somewhere else, maybe from an old employer, and you have to obviously move it or you're going to lose it, you can move it over to us, and all this would be tax-free because you're not actually taking the money out of the account. So once you now have your account open and funded, we will get to this process. You'll then make an offer to purchase real estate, and you'll let Midland know. You'll fill out our forms. We'll make sure that all of the documents are titled correctly in the name of the IRA. You'll then close on the property purchase using your IRA money. And then lastly, everything will be paid for using IRA funds. And all, same with any income coming back in will be back into your account. So it's very simple. I mean, aside from the titling and who pays for what, it's like the same as just buying it, not with your retirement account. So, all right, what if I need immediate access to my IRA funds? So typically how it works once you own real estate in your IRA, if you need a bill paid, you'll go onto your online account at Midland. We have this really nice, kind of like a bank portal that you can request a bill to be paid or add money to it or take a distribution if you want to take money out personally. So you basically log on, say, I need a bill sent here on this date from my account. That's fine. If it's a business day, we can get it sent in one business day, no problem. But what if you're doing like an auction property? Or, you're doing a bunch of rehab work on your property and, those contractors need their checks like now. You can open a checkbook control LLC. So what that means is, your IRA opens an LLC, and then the property is purchased in the name of the LLC. So this gives you checkbook control capabilities. You get your own checkbook. Obviously, it's a lot more risky doing it this way because we're not monitoring where you're writing checks to. I mean, really not monitoring it at all, but if we see something, you know, we'll tell you that's wrong, you know, but if you're doing checkbook control, I don't know where you're writing checks to. So you have to be very good at making sure you're only cutting checks for things that are IRA property related. But this is a great solution if you want checkbook capabilities immediately. So, right. Another way to invest in real estate would be promissory notes. So say I don't want to buy a whole property, or maybe I don't have that much money to buy a whole property. This is great for people with a smaller retirement account that wants to get started. They can actually essentially be the bank, and they can lend money out of their retirement account in the form of a note. They set the interest rate and the principal, and they set the terms of the note, also including like when they have to pay it back. And all of that money goes into the account tax-free. So that's really cool. I love that. You can even, once again, partner with yourself. Partnering can be done with any investment really, but notes are great because you don't need that much money to do it. So yeah, this is just a little more information about it. Typical interest rates range from 6 to 12%. But you just have to, if you're setting it, the interest rate has to be at least prime plus 1. You can't just like give sweetheart deals to your like friends and family. You know, makes sense. Yeah. All right. So
You never loan it to your children.
yeah, don't loan it to your children. That's for sure. It's technically your children are prohibited parties, so you ain't gonna lend it to them anyway. That's a good reason.
Sorry,
I
I
can't lend it to you. You're a prohibited party from my IRA. Yeah, try to get over
That's
that
a good
one.
way to protect your money
It's
in the
really,
first
yeah.
place from your kids.
That's why the IRS did it. They're like, okay, so your kids can't beg you for money. Well, they can't prohibit it.
I'm so proud of you.
Yeah, no. So this is just a summary of how to open an account, which I covered. Fill out the application, fund your account, choose your investment, which would be real estate. So, does anyone have any questions? I know I kind of covered that kind of quickly, but also, did I talk too fast?
You're fine.
Okay, sometimes I talk too fast. Do you have any questions?
So when the money is in the IRA account with Midland, where is it? Is it being invested? And is there, I
Like
would
an
assume it's
interest
not-
bearing account.
Well, also the FDIC guarantee doesn't apply to that, is that correct?
Our accounts are FDIC insured, I think up to the amount. But it just sits in a cash account. You're not collecting interest on it. And we use Sandcap is our bank. And then we also have used Centennial. It's one's our depository, one's our something else, but yeah, so.
They're not an IRA manager. Right. That's where your interest would come in from.
Yeah, so yes, so it's a cash account until you tell us,
Your
hey,
legal laundry.
Right.
yeah, legal laundering service, yeah. Any more questions?
I think people mostly, a lot of our real estate questions come from the 1031s more than the IRAs.
Great, I mean, 1031s have been insane for us.
Good.
Really insane. Actually, this is our busiest year for 1031s like ever in the history of our company.
Wow, that's awesome.
It's awesome, but we are very busy. Which you can't complain, like, cause who wants to not be busy?
Yeah.
I mean, I enjoy it, but yeah, 1031s are insane. They're on fire right now. I don't know if it's because Biden is proposing to eliminate them. Do I know anything about that? No. Hopefully they don't, but I mean, they've been trying to get rid of 1031 exchanges for like, how long now?
Every side of the ad.
Yeah, so really, we'll see what happens. I'm not trying to stress it just yet. You know, there is a petition that you can sign to try to like have them not eliminate 1031. So
Send that to us.
yes, I'll send it to you guys. Sign it. I signed it. Yes. So 1031 exchanges. So these are two totally separate, different things, strategies. Real estate IRAs. I don't own any real estate. I'm using my retirement account. It's gonna be for a brand new property for investment use only. 1031 exchanges, I'm using personal funds. I already own an investment property. I have capital gains on it, depreciation recapture tax on it, and I want to sell that to invest in a better investment property without paying taxes. So that's where a 1031 exchange will come into play. Okay. So a 1031 exchange will defer capital gains, depreciation recapture tax, health and state taxes. The only state that does not recognize a 1031 exchange is, does anybody know this answer? Pennsylvania.
Really?
Where I'm originally from. So
Oh, that's interesting.
So you tell
why
people you moved to Florida just for 1031s?
do I?
Do you tell people you moved to Florida
I
just for
moved,
1031s?
yeah, I moved here when I was 8 for 1031 purposes, you know. I really wanted to get into the 1031 industry.
That's interesting.
But yeah, I don't know why Pennsylvania doesn't allow it, but they don't. So
So dumb, stupid questions. So because they don't allow it, that means we can't do any properties in Pennsylvania.
yeah, you just won't defer any, yeah, exactly, properties,
So
taxes
if
on
somebody owns
property.
a property in Pennsylvania, they're not gonna be able to exchange.
Correct.
Or exchange from here.
Yeah, I don't know why. Pennsylvania's just really lean on it.
Well, that's nice to know that, good news.
Yeah, and there are a lot of Pennsylvania people, but I feel like there's a lot more Michigan people around here and like, you know, New Jersey, like that area, good to go. So bring your properties over. All right, so some advantages of a 1031 exchange aside from deferring taxes, because like I mentioned, so say I own an investment property, I have capital gains on it. You know, some people's capital gains bill is like hundreds of thousands of dollars. It's insane. So by doing a 1031 exchange, I buy a property of equal or greater value within the property that I'm selling, and I'll defer all of those taxes. So that $100,000 I might have had to spend in capital gains, I can put towards a bigger, better investment property and not pay those taxes. So aside from that awesome benefit, why would one want to do a 1031 exchange? Okay, maybe I want to acquire property with greater income potential. So what's cool is, say I own vacant land. Obviously I'm not getting any income from it. I've just owned it for a while now, and I would love some income generating properties. So I could sell a piece of vacant land to buy a commercial or residential building. So that's great. Consolidation. So say I own a couple properties. So, you know, I don't want to like have to keep going back and forth to all these properties. I could sell both those properties and roll into one bigger, better property. You know, same with maybe now I've been doing too much managing. So I could sell them and buy a piece of vacant land where I won't have to worry about managing it. And this one is the coolest one because we live in Florida. So a lot of people are moving here from other states, and who wants to manage their investment property in North Carolina when they're moving to Florida. So 1031 exchanges are awesome because I can sell my property in North Carolina, anywhere but Pennsylvania, and I could buy a property here in Florida. So that is huge, like huge selling point for you and your clients is moving markets. You know, think of it like if you get a client moving from out of state and you say to them, do you have any investment properties in that state you're moving from? Oh, why do you want to keep it up there? Did you know you could do a 1031 exchange and buy a property down here? They might not have known that, and now you might be getting a twofer, like, and two deals out of it. So it's got to be thinking of it. So just some misconceptions about exchanges. You want to swap properties. So say Joanna owns a property for investment use and I own a property for investment use. I go up to Joanna and say, hey, want to trade properties? That's what people think it is. That's not the case. Joanna doesn't even need to know I'm doing a 1031 exchange, really. It makes no difference to her what I'm doing. So that is a very common misconception. It's not just for investors with large commercial properties. Like I said, vacant land, residential, apartments, duplexes, whatever you want. It just has to be for investment to investment or business use to business use. It doesn't have to be like the same type of investment property, the same type of business property. And It is not difficult really to do. If you follow these rules, it will not be difficult. All right, so these are the rules to follow to not make it difficult. The net selling rule. So, okay, so this is how much you need to spend to defer all of your capital gains tax. So the net selling price is the closing costs minus any realtor commissions. That is the price that you need to match equal or greater to defer all taxes on your current investment property. So say I sell a property for $200,000, and that's my net selling price minus everything. My next property needs to be at least $200,000. But oh no, what if I couldn't find a property for $200,000? The one I wanted is $180,000. Or no, just kidding. I couldn't find a property for $220,000. So what would happen now if I have a property I'm selling for $220,000? The property I'm gonna buy is $200,000. What do I do? Can I not buy it? No, you can still buy it, but you'll have to be paying taxes on the difference that you didn't meet the difference
Just
of.
the difference.
Yeah,
So
just the
on
difference.
the closing costs, because when we're doing other things, they'll look at the basis based on money that we put into it, like if we had to paint it to get it sold. Or if we had to replace the roof to get it sold.
I don't know if that would be.
Would you find out for that? Because I think that is really kind of a big key for us. Like if we're selling our investment property and all of a sudden the buyer's like, oh my God, it's gotta have a roof or something. You know, we could spend $20,000 on a roof to make part of the sale.
Gotcha.
Would
I will
they-
find that out.
Would they include that? Is that considered a miscellaneous expense?
That's a good question. I will ask that. I know it's just, we look at, like, at least on our end, we just look at that bottom line number,
Yeah.
like, you know, but I'll ask if that's considered part of the closing
That
costs.
would really be interesting.
But I will find that out.
Thank you.
Stay tuned for a follow-up email.
Okay.
So, yeah, so you could still, you know, buy that property, but you would be taxed on the difference. So you really want to try to buy a property of equal or greater to value. So both properties have to be for investment to investment use or business to business use. So it is awesome that if you own a business, you can acquire another office building by selling your current one and not paying any taxes on it. These are examples of Likekind Property. Pretty much anything that is a real property could qualify, so. What does not qualify? Just like IRAs, this is not your primary home, this is not your secondary home. You can vacation up in it up to 14 days a year or up to 10% of the time you've rented it out for the year. So if you rent it out 365 days a year, you can basically live a vacation in it up to like 36 days or something. So, but that's like tricky because it has to be like a 10% of the time you rent it out. So it's either that or up to 14 days you can vacation in it. Partnership interest in stock also does not qualify. You have to use a qualified intermediary. We are a qualified intermediary, so that is what we do. A qualified intermediary is not your realtor, your lawyer, anyone that's like an agent for you. It has to be a third party person, and that is us. So it can't be the taxpayer, it can't be a lineal descendant of the exchanger, an agent of the person doing the exchange. We're also certified exchange specialists. We have 2 on staff, and there's like 6 in the state of Florida, maybe 7. So that's just an added, you know, benefit of working with us over other QIs, because anyone can be a qualified intermediary. That's why you hear like American Greed stories and scams and stuff, because anyone really can take your money. That's why you want to work with a reputable, good company that, you know, stays up to date with their stuff, and that's us. So this is by far the most number one important rule is the timelines, okay? So there are 2 major timelines to be aware of, the 4 to 5 day timeline and the 180-day timeline. Both timelines begin on the day that you close on your property you're selling. So once I close on the property that I am selling, these are consecutive days, not just business days, I have 45 days to identify up to 3 properties that I am interested in replacing the current property with. So what if, I go by day 20, 2 of my 3 properties fall through? Well, you have up until day 45 to keep switching out your properties.
Oh, cool.
Okay, so it's fine, don't stress it. But once day 45 rolls around, you're locked in. So make sure you know what you're gonna identify. I always tell people that call in, oh, well, if you know you're doing an exchange in a month is when you close, maybe start looking for replacement properties now, because this timeline is extremely strict. There's no workarounds with it. So the faster you have an idea of what you wanna buy, the easier it'll be for you, everybody.
Are you guys finding like a lot of people stressed about these timelines with the market being
Yes.
crazy and like things falling?
Absolutely. That's why I
Yeah.
keep reassuring them, like, well, you could keep swapping it out up until day 45. And if you have an idea, like everyone that calls me, I'm like, if you have an idea of what you want to buy before that closing date is.
Yeah, like figure it out before your
Figure it
45
out.
days start.
Yeah, because say I find a property day 2 after closing, I could start closing on that right away. I don't have to wait
Yeah.
until day 45 to close on it. Because it's a hot market and yeah, I get it. It is stressful. So you can identify up to 3 with any value by day 45, swap it out, change your mind, figure it out. You can identify more than 3, but then there's this rule that comes into play that the sum of all of the total values cannot be more than 200% of the property that I'm selling. So if I want to identify 10 properties, cool, but the total can't add up to more than 200% of the net selling price from the one I closed on. So let's just stick to 3 properties if you can,
Yeah.
it's just better. So after that, I have to close on any of my properties by day 180. So some people sell 1 and buy 2. You have to close on both of them by day 180. Whatever is not closed on, you'll be taxed on, essentially. So 45-day rule, 180-day rule, and the 180-day rule begins the same day as this one, the close on the sale date, not after day 45. It's 6 months total is what you have to close on it. So this is what people stress about the most. Like I said, with proper planning and preparing, it's okay, you can do it. Other important information. The taxpayer on the title of the property you're selling, also known as the relinquished property, has to be the same as the one on the new property, the replacement property. What if I get married and I want to add my husband? I could do that after I close on the new property. But for the purpose of the exchange, it needs to be taxpayer, it's the same taxpayer. This one's huge. If you're doing a 1031 exchange, you have to get it set up before closing on the property that you currently own and are selling. So if it's already past closing, there's nothing you can do about it. So holding period. So a holding period, so that's basically how long does the IRS make you hold the property before I can sell it and buy another investment property? There really isn't a defined time. We like to say 2 years as a safe harbor rule. It's 2 years. So this isn't for you to be like flipping properties and stuff. So if you want to do an exchange and then 2 years later sell it and buy another property, fine. 2 years is best. Like I said, no fix and flips because that 2-year rule. Here are a few other different types of exchanges I'm not going to get totally into because I will confuse everybody, but you can do a reverse exchange. So say I found the property of my dreams, but I can't sell the property that I currently own first. What do? You can do a reverse exchange. So basically I buy the new property first, and that is when the timeline begins, which is still 180-day timeline. So I then have 180 days from the date that I close on my new property to sell my old property.
Oh, that's so stressful.
Very stressful. Otherwise you will be taxed on your old property. So some people know though, like, oh, my closing date's gonna be in 2 months from now of my current property, but this new property they want to close in 2 weeks.
Yeah.
Okay, depending on how much money you're saving in taxes, you might want to go for it, especially in this market. I've been getting a lot of reverse exchanges, which cost a lot more money. So just to give you an idea, we charge for a standard 1031 exchange which is I sell my current one, I buy a new one. We charge $995 if my property is more than $100,000, plus a $250 replacement property fee per replacement property. So if I'm just selling one, buying one, it's $995 plus $250 plus a $30 buyer fee. Reverse exchanges, $4,500. Okay, why is it so much more money? We have to set up an LLC. You also, another thing with a reverse exchange is you need to have the money to purchase the new property first, because since you're not selling your other one first, how are you gonna fund the new one? So you either need to have cash or financing figured out before you do a reverse exchange. That is an option, $4,500 option, but it can happen. Traditional, we already went on that. There's also a thing called an improvement exchange. An improvement exchange means, so I'm gonna buy a property and it does need some, improvements done to it. It needs a new roof, new flooring. I can basically identify those improvements in the cost of the exchange. So say the property that I'm selling is the property that I'm buying. Okay.
Yeah, no, we got it.
Yeah.
Like when we were talking about the roof, when you're gonna buy the house with the roof that
Yeah.
needs to be fixed.
Yes, I need to, but I'm gonna wrap that cost into my current cost. So you can basically do that too. So say if you wanna buy a property, the one you're selling is $200,000, the one you're buying is only $180,000, I'm gonna identify $20,000 in improvements.
So you're better off if you're short, just finding something wrong
To
with it
fix.
regardless.
Correct, but you have to have those improvements done by day 180.
Yes.
Oh.
You can't cheat.
Yeah. Like some people will buy a lot and build a new house on it, which is great, but they have to get it done by day 180.
That's not happening right now.
Exactly. Unless you're
But
really
I like the idea of being able to upgrade it, because that's what a lot of investors are doing. They can get a deal on a piece of crap and go in.
Absolutely. Like I have a lady who's doing an improvement exchange too, like coming up here, and yeah, the property that she's buying needs, like, she says, like a roof, a pool. She's adding a pool to it. She's adding,
Yeah, it needs a pool.
yeah, it needs a pool. She's buying in Destin, Florida. So she's like adding all this stuff to it, but she has to identify what those improvements are and how much she's spending, because you want to get it as close to accurate as possible.
And it's the cost of the improvement, not the value.
Correct. Correct. So those also cost $4,500, because once again, we're setting up an LLC and it's just more work. So obviously, if you could just do a traditional exchange, it'll make your life easier, our lives easier, but there are other options. Oh, yeah, I talked about that, okay. Okay, and that is me, that is it, okay. So my contact information, if you would like to get a hold of me, is my email is Whetzel, WHETSELL @midlandtrust.com, and my direct line, which you can also text if you just have a random question, is 239-333-4913. And our website is midlandtrust.com, so there are a ton of resources on there.
Thank you. So you will talk to one of our agents' customers if they have a real brief question, right?
I can, yes, I am available anytime. You can even come in for a meeting if you need to. We're right down the street from your office, on the same street actually. But yes, we're here to help. So you don't know all the answers, but.
No, you guys are great, because you said you've been in business 20 years. Since I started in real estate, I followed Brenda from all the places she's worked, and you've been at Midland the longest.
Yeah, I've been there for like 8 years now. So
And it's a great company. So it's just one more tool, when you start thinking about ways to look for listings and sales, and how can I get this seemingly impossible deal done? Think IRAs, think 1031s, call Brenda, and she can explain it, because this was a very quick little thing. And they do offer CE prices too, through the board and through themselves. So watch the blogs, watch your email.
And have a
we can do that.
brainstorming session together. If you're like, oh, I have this idea, like I have those calls, that's fine. I don't charge for, questions. So any questions you have, feel free to reach out to me.
That is fantastic. And hopefully those of you online got something out of this today. Again, Taco Tuesday for YPN from the association is this evening. This Thursday, we're going to talk about for sale by owners. Since we're running out of inventory, their FSBOs think they can sell it all by themselves. Yes, well, can they, and should they, and how do you get it done? So come in, hopefully on Thursday, or tune in, and we will talk to you about how to make some extra money using for sale by owners.
Awesome. Thanks for having me. Bye.